All right, good evening, everyone. Let's get started. Um, Today is Tuesday, October 15th. Welcome to the Trade Findings and Adjustments. I am Keith Bybee. A couple of you kind of trickling in, but I'm just going to go ahead and get started. I talked about last week on a target covered call, and if you had done that one, you probably didn't get filled at this kind of a price, but you certainly could still have done it. Just looking about where that would have been. So that was, let's see, this day, which the next day would have been closer to 110. Let's see. Excuse me. So it would have been October 8th was the last one I did. And I was looking at prices around 108.50. The next day it jumped up above 110. So let's go over a couple things. That one would have been cool, but I understand that maybe most people wouldn't have been able to get these numbers. But what you could have done is gone up to 115 in strike price. Same month, October 25, probably got filled around 110-ish, 111, and you'd be pretty much at the same numbers. In fact, let me just put in some numbers that we had gotten filled on for a client and kind of give you an idea of where things would be. I've taken some screenshots and I'm going to post those in. Okay, not sure where our chart went, but let's try that again. All right. Technical difficulties. Something like that. Yes. All right. All right, I know this is kind of small. Let's see if we can zoom in. What we have is, these are in lots of 500 shares. Obviously, if you followed what we talked about last time, 100 shares for a small account is going to be more reasonable. Trading up at 111-ish today, almost 112, kind of dipped above there. It's going to be, 11, 12 grand. So we talked about target covered call. So here's where we got them. 500 shares. You see these ones down here. 500 shares. 106.59. So obviously that was going to be more towards these days earlier in the month, and I think that's reflected here in the screenshot, but yeah, October 1st. We've got another set after it had gone up in October 8th. And basically, they're pretty close to the same numbers. So November 8th expiration at a 115 call gave us about $1. I think you could even get better for that today, as it's obviously trading up at 111, 112. And this one was trading at 108.90 when that was purchased. So obviously these calls you're going to get better credit for, which is obviously a little better protection, but still worthwhile and still gets you about 3% overall of upside. And here are the numbers of those. I couldn't get the names of the columns here because that showed other positions for a private account, so I didn't want to show all that. But not that it would have been personal information or bad, but that's just trying to keep things kosher. But here is our year-to-date column, and why don't I write that in actually? Year-to-date. A little sloppy. And this was today. Today. All right. That's not too bad. Check out those numbers. So overall, on all of those, that's $500 in one day. 3,325 of those year to date, which obviously you saw the dates down here. And, you know, I can say these are still pretty good options for you to look at. Not so much the 25th at 110, because that would put us into the money, which we don't want to be for a covered call position, at least not for this. So I would be looking at checking out that November 8th. Gives you a little more time, gets you a little closer to a pre-earnings run, and gets you today about $1.50. But let's go check, erase these drawings and check out what we can do. Give you some options for today. Or tomorrow, as it were, because you can't place trades right now. So there's October 25th, going down here to the 8th. So maybe not $1.50. You could go to 114 for about $1.50. If you bought in at 112-ish, that still gives you $2 of upside and $1.50 of protection. Or if you want a little more upside, you've got the 115s as an option as well. So I'm going to erase this one. We're looking at November 8th. I'm going to go for 115s on this and leave it up to you if you want to do more of a 114 to get a little more credit. And those are about, what, $1, we'll say $1.10 on the low side. And 112-ish. So let me think. I mean, just kind of looking at the chart, we do have now a support level at 110. So we got that going for it. They do a nice dividend, but you have to be either called away by November 8th or have it expire worthless to give you credit. Roll out new calls, short calls for more credit, be in it at for the mid-November dividend and earnings. So I mentioned that last time kind of as something to think about in the future, but I'm sure we'll talk about that more. So for our numbers, let's see, we said 110. We get more like $3, we'll call it, of upside, plus the 110. We're looking at 410 potential profit, which is going to be more like 3.5%, a little over 3.5%. So not too bad. I still like it, and you know, it's something that you can hold on to as a retail Christmas rally run through the end of the year. So that's the line of thinking there. Any questions about this one and what we looked at before, and any thoughts? Did anyone do it by chance? Well, I'm not getting any responses, but I can tell you from this screenshot, obviously somebody did it, and it's not looking too bad. So that's a thought there. It's more of a reiterating last week, and I would say even a better circumstance this week. So all right, moving along, we talked a little bit about Ford. I believe Kevin had discussed dollar cost averaging, leap long calls of Ford from like $1.10 on the day before on the 7th maybe, and bringing his cost basis around where it's at now. Where are you, Ford? That was like 75 cents. And then the next day, I actually had thought, hey, we should buy 20 more and lower that down to 60 cents cost basis. No, I didn't put that in for his account here, but it was still a decent idea, and you'd be looking pretty good today if you'd done that. Here's our October 8th chart. I'm going to move that date till today because we're going to change it. Forward. Well, all the way back up to 9. We did get a very slight death crossover there, but man, did we call that one pretty good, if I do say so myself. And there's no reason why Ford can't get up to 10, and I'm sure you're sick of us, and especially Kevin, talking about it. So that's Ford. I'm not going to go over that. If you want to look more at it from the last time, you can go do that. And hopefully, if you're in a similar trade, or if you did dollar cost average there, and I guess I should say, if you're following specifically stuff that we had gotten filled in and Kevin's talked about, you'd be at a 75-cent cost basis, and we'd be looking to get out closer to $1, where we could let the rest run and close off half of them for a profit. So take that off. This is old. Let me put chart of target back on. No, we don't want to pay for stuff. All right, so we got this one. Let's see where it puts it. Man, this hates me. All right, you're going on the next page. Target. All right, guys, is there any questions so far? Any thoughts? As you're thinking about it, I was kind of playing around with an idea of Activision. Activision has looked terrible most of the year. Hasn't gotten up to its previous high in 2018. But it is sitting at year-to-date highs around 55. My thought process was kind of looking at an opportunity for this stock to what is the best way to say it? Not kind of a pre-earnings run, but a increase in sales in the coming near future. I don't know if any of you know much about Activision Blizzard, but they're just a gaming developer. They make some pretty popular games, and the one coming out here soon at end of October 25th, is a Call of Duty. And assuming most people here following with us tonight don't really care about video games, I'm just going to explain you don't have to care about it. In fact, if you just think all of us millennials are a bunch of dummies strapped to the computer screen, I'm not going to really argue with you, but that doesn't mean we can't profit from it. So, October 25th, a new game of Call of Duty is coming out. Just to give you a little bit of backstory, this was a game that has become a franchise. They put out a new one every year, and it seems their last several that they've done for the last few years have been making less and less overall revenue. And so they're, in my opinion, wising up and going back to some of the original games of Modern Warfare instead of the sci-fi space silly stuff that they've been putting out in recent years. So just did a little Google search on some of their stuff. I found that their pre-orders were at a GameStop stores were number one back in June for pre-orders going out for those games, which is positive. And just to take a look, this is just an article that goes over some of the last games, and you can kind of see their most popular one. These are bars are in millions, so this would be 30 million revenue for this game, and it came out in 2011. So if you're looking at the dates, 2012, this game came out making less, 2013 making less, 2014 much less, 15 still less, and so on and so forth. Here's 2018, this game, about half what they made from their best-selling Call of Duty Modern Warfare 3 back in 2011. So they're giving people what they want, in my opinion, and going back to where people were interested in a current technology, current time frame style of a game that is a first-person type shooter, and that is a good chart that kind of illustrates what I think they could be seeing. So better sales, and hopefully seeing that in the near future. That's kind of where I was looking at. Any thoughts or questions on the idea of something like this? Activision, let's check it out. So there's a few things that you could do. You could be looking at a covered call. You could be looking at bull call spreads. I probably wouldn't necessarily be looking for a longer term bull call, just because we're not in this company, our interest isn't in this company for a longer period of time. It's more for seeing some better sales from a new game, and that's really kind of it. But it might make sense to go further out in time, at least to maybe December even, or we have the longest one is November 29th. We could look at January, might as well. but I'm kind of thinking along the lines of a bull call. But let's check out November 8th, just out of curiosity. You couldn't do too bad with a covered call where you could be at, they're trading at 55.5. Here's another dollar above. You could even go 57. Dollar and a half of upside plus another $1.87 of credit. That gets you through the release of the game, which is supposed to be October 25th again. It gets you, let's just see when their earnings, so right up to their earnings. I don't know that I would want to be in stock for earnings. Not a very great dividend, so not much interest there. But it doesn't mean that's not a good idea. You've got almost $2 of protection. You could maybe add a put closer to earnings if you were worried about it, but this short call expires the next day. Earnings on the 7th, this is the 8th. And you probably get a small little dividend there. What did they say? Not saying when their dividend date is, so that doesn't help. Let's just check out. I'm going to throw that out as an idea. It's not a bad one. It's fairly cheap, at least compared to Target. It's like half of that. Let me just go out a little further and see what there is. So this is November 29th. That gets out of, that certainly covers that time frame, and on a pop you could just take that off. Let me just look at January. Or do they not have, here it is, January. So just looking at some of the prices here, if you went out to January compared to November, end of November, you're sitting somewhat close to the same numbers. So 56 strike, 286. We don't have a 56 strike here. We have a 57. That's going to be 30 cents more. $0.50 more. All right, so you're seeing me kind of struggle. I'm just kind of going through my thought process as I've not really looked at these. I'm looking at a little bit out of the money, so it's not terribly expensive. And just see what we can do. So let's look at this. I would do something with at least a couple contracts. Reason being is if you get a pop somewhat quick, you can take half of them off, let the others run through the earnings. Let's look a little closer. So obviously this isn't a ton, but you get to decide how much. Kind of thinking more towards sooner because we're really just looking for end of October push. Getting some good sales. This is kind of what I'm looking at. It's pretty cheap. Again, you can take half of them off, let the other ones run pretty quick if it pops. So this is the one I'm going to look at. Let's just take a screenshot. I won't place an order. This isn't my account, although I have before. But seeing as Kevin's kind of tapped out and needs a little cash for dollar cost averaging current positions, I'm just gonna be nice and not give him a headache. So there's Activision. Leave the target on there. Let's see. There we go. Sorry guys, formatting issues. There we go. My goodness. All right, Activision. Bull call. Buy to open. Let me remember my strikes. Let's get that picture up. Make it simple. Sell to open, same. November 29, 56.50. You would have more profit potential if you went up in strike on your short call, and that's totally doable too. And there you go. Price is 288 for the long call, 255 we'll say. This is actually more like 295, 255. And that's a thought. Get a couple of them. You can close them off, close half of them off if they go up quick. Looking for a run. From their Call of Duty franchise. Any questions, guys? Just real quick. You could even do something like that as an option. I'm going down to 2 just because there's half of them that you can take off, right? That one's not a bad idea either, but let's even look at 58. A little more upside, not a bad idea. There's several options there for you to look at. I put mine in, and good luck with it. So on the note of closing half of our calls off for profit, we did book some profit on Bank of America. I think I can't remember if it was last week or the week before. Somewhere in there, Kevin or I had suggested a 10 contract bull call on our leap long calls, January 20, 35 calls that kind of went in with the rest of these that we had already had out. And so if there were 10, we booked 5 for 100% profit pretty much today. Let's just see. We gotta clear that. Look at Bank of America. About to open, so there was more like 20. Let's see. Sold 5. I don't know why it's not saying how many on that one. It's kind of weird, but for an 8-cent cost basis, all the way up at close to 14 today. So not quite 100%, but close enough before earnings tomorrow. Hopefully, if you'd followed along with that, you'd have thought, we can go through earnings with 5 contracts and be risk-free, booking some profit there and letting those other 5 run. Could have been smart, would have been smart. Congratulations if you did something like that. But that's kind of what's cool about these long calls, and specifically how we've managed Bank of America, because it can be kind of it can move around kind of stupidly for stupid reasons, and we've done pretty good at a few options that have been losing more and more money to dollar cost average. We were originally way back when closer to like a dollar in cost basis that we've added to positions, dollar cost averaged on dips just checking out you can kind of see what I'm talking about. But we had booked profit on some around here. It came back down here. We bought more, sold some more up here, playing some support and resistance, and that has been kind of cool. So just kind of throwing that out there to remember. Not a big deal if you kept those. I'm just going to write here. Booked profit. I'll say, should remember to say long call. I don't know why there's H's by Woohoo, but there we go. Completely paid for, running into earnings. That's kind of cool. That's it for me. Guys, is there any questions, any other thoughts or ideas? Kind of took a little more time than I wanted to today, but I thought it was worth noting some good stuff happening, and hopefully things that you've followed along with, you're doing well as well. So not seeing any questions come in right at the moment, but I appreciate you guys joining me tonight. Have a wonderful evening, and we'll get this posted so you can check it out. And yes, it would be cool to see what we can do with Activision. Target, that's a no-brainer. Forward long calls, just do it. No-brainer. Actually, you should have done it last week. So last week it was a no-brainer. We do have a question. Okay. And someone is saying buy to open or bought to open Bank of America 15 cents, sold at 100%. I'm guessing what you're saying. Sold at $100 and 65 cents. Are you saying this is one that you had booked a profit on? Or are you asking if this might be a good idea? Yeah, sold for $1. And that is cool. Bought at 15 cents, sold at 65. Excuse me, sold at $1. Great job. I would love to shout out your name, but I'm told to keep it under wraps. Thanks for sharing. That's awesome. Congratulations. Keep it up and let it help you into the next trade. Guys, any other thoughts, questions, ideas? tell Kevin thanks. I will definitely tell Kevin thanks. Thank you guys so much. There's nothing else coming in. Again, I appreciate it. And Kevin should be on for Thursday, 10 o'clock Mountain Standard Time trade findings. And I'll probably be joining the rest of you then. And have a good night.